Good morning, NIO fam. It's Laser here with another weekend analysis. We're up bright and early. It is 7:40 a.m. and we're here to drop my analysis as to where we see NIO going into next week. Now, if you're brand new here and you're just joining in, we do one of these videos once per week. So don't forget after this video, if you enjoyed it, to smash the like button and hit the subscribe button if you want to get notifications and be first to watch when I drop one of these videos once per week. Eventually, I'll get around to it where I'll drop other videos. But for now, we like NIO. NIO is our favorite stock that we like to talk about, and we like to talk about where we see it going. And when you're watching these videos, we try and actually analyze where it's going. Here we do things differently with my analysis. We look at the velocity, which measures the speed of how fast the price is going to try and actually complete the analysis. But outside of that, we just like to look at the chart. That's one thing that I'm going to preach, and I'll always preach. I think you don't need indicators to trade. It's the answers are in front of you as long as you guys are looking at it. The more mess you have in front of you in your chart, the harder it's going to be to read a chart. I love this. I could look at this. It's nice and clean. Anybody can read a chart that looks just like red and green candles. But once you start throwing too much junk on your screen, it makes it more harder. You dilute what's in front of us. And so that's what we're going to do today. We're going to talk about a little bit as to what is happening. And we're actually entering a very, 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 very exciting window. So going into next Tuesday, and I'm pretty sure the market will be closed on Monday, and it opens right back on Tuesday. It'll be our 9th candle on that 2-week time frame. So if we take a look here, 9th candle on the 2-week time frame. Let me actually pull up my tool here. Date range. So this is the first candle from the downtrend. That's we start counting day one. We start counting like from the top, and there's our 8th candle. 8th candle is complete. We're starting that 9th candle. You can see, and if you look right to the bottom, like I'm trying to point like right down there, it starts on Tuesday, and that candle, the 2-week candle, will complete by February the 3rd. Now, if you look at any of the 9-week like cycles, it's not like going to be like all in that 1-2 week. That's usually the start, which would very likely mean if we get a green 2 weeks on this next 2-week candle, it's safe to assume the following next 2 weeks will also be green. What does that mean? That means we got to exercise a lot of patience. That if we start to see NIO rise and confirm the cycles, and if you haven't seen my cycles tweet, definitely check it out. You need to be following me on Twitter. Check me out on Twitter. I've posted the cycles tweet analysis as well. If this confirms that this is the cycle and we're going to see that rally, you can see just the last rally. I think this was a 7-week rally from top to bottom. Let's see. It was 7. And we saw 1, 2, 3, 4. So technically speaking, we kind of did it bottom. Yeah, I mean, you can say it kind of bottomed on the 12th and it peaked on the 23rd. That's a good month of like green. Now the last, there was another rally that lasted like literally only 2 weeks. It was like it started on the 22nd and it literally peaked the very next week. So it was like maybe like a 1 or 2 week window. In fact, if I were to dive in and see that one, that was 1, 2, 3. So we're in for at least anywhere from 2 to 4 weeks of green and hopefully more. Now, if we get like a really nice move, we could see like a 2-month rally, right? Like that's the best case scenario. But we'll dive into that. There's a lot of things that I wanted to talk about that's actually changed, and we've been actually monitoring and analyzing. So we're going to jump into the 24 hours here. We want to talk about some things that actually changed from last week to this week, because last week we were a little bit disappointed with the price action, how it kind of broken down. things are starting to shape up a little bit more. The narrative is starting to change. And that's one thing that I'm here to actually talk about today as well. I'm here to talk about how the narrative and fundamental analysis is different from the chart mechanics, which can be measured using technical analysis. And anybody can do it. Anyone, even you that's watching right now, if you want to do technical analysis, it's absolutely free to make. Like if you were to go on tradingview.com right now, and this is not an ad for TradingView, I'm not getting paid for this at all, but if you were to go and then look up NIO and load up a chart, all these tools on the right hand side that you see me use, you do it. So if you guys are like, I know a lot of people do ask me like questions like, hey, where do you see the price going, and where do you see that price target going? You can do this yourself, and I encourage you guys to just get started. It takes practice. I know this might look intimidating, but it's fun. I mean, if you come in here every single week and you're not doing this, I'm hoping to change that. I want you guys actually in TradingView, and I want you guys charting stocks right alongside with me and actually understanding. And the only tool that I believe that you want to start off using is a trend line. A trend line is you can take 2 points and you can connect them. And it's one of the most powerful and simplistic tools to help us define trends. And there's certain rules that you learn along the way. But yeah, try and follow along. So this is an analysis. Like if you've seen all of my last week's videos, you're not new to this, and you probably know what I'm drawing here. You were drawing my 2 trend lines here, and there's your 1. There's your 2, okay? Here's our 1. And we're trying to compare it because this is what I would call chart mechanics, okay, guys? This is chart behavior, chart mechanics 101 that I'm trying to actually talk about. This is 2. It's scary how close these guys are similar, and I'll explain. And if you guys don't see the similarities, I'll explain it to you. So usually what happens, and the same is true in reverse, but usually what happens before a stock breaks out, you'll get the initial break of a trend line, and then that's when you get the choppy price action, which creates a second trend line, which you want to draw, and the big move comes after it's broken up. Now, I want to point out something very interesting. Notice that it actually broke above the second trend line, and the very first pullback, that was your bottom. I mean, that was your dip. That was your dip to get. And it broke right back above and gave you a successful pullback, which is what I'm going to be looking for going into next week. And then what did you get? You got that beautiful, beautiful rally. Why is that beautiful? I mean, like that's a 90% rally. Those are rare. But I mean, you don't go on like essentially a 4-month downtrend without seeing that big pop. And we've been waiting for that. It hasn't happened. We know it hasn't happened. We've been watching here now. Below here is our velocity. We know we haven't gotten that pop yet. The big pop, the big move is going to happen once we actually get that cross on that 200-day moving average. Now we'll go ahead and we'll talk about this velocity in a second, but I don't want to talk too much about the indicator because I want to keep things simple in the chart. Now we can't quite see it very nicely, but I'm going to dive into the 1-hour time frame. And this was like trying to figure this out. So pretty much I'm going to paint this picture from here, which was to around here, was like an entire week where it broke out on the Monday and then it pulled all the way back. And then so this week we basically almost are forming like the exact opposite. It consolidated. We knew something was happening as soon as it gave us that really big pop. That was kind of our big hint. And I tweeted about. There was so many tweets, guys. If you're not following me on Twitter, you got to follow me on Twitter. Some of the stuff I was posting was like gold. golden stuff actually. Because as you can see on the velocity, I was like, yeah, it broke on the 200-day moving average. It's looking great. Now, but we're not gonna do the indicator yet. That's last. It's important to just look at the chart. So let's delete this. It's getting messy. I hate a messy chart. You guys know that about me. I hate a messy chart. I think it's still looking clean, so we can leave it like that for now. So here's what we were looking for. The last time it broke, we were looking for that successful hold of this trend line. So we're pretty much in the same boat now. We've now gotten another breakout. Y'all know what happens after the breakout now. We're going to actually get another pullback. Now the pullback is there to just confirm that this is legit. And I'm just going to show you an example here of what some of those pullbacks look like. So we ended up getting one over here and one over here. This took a couple of attempts, broke back under, finally broke up, and you didn't get like that run until it was like, all right, we're good. This ain't actually, you guys don't have to worry about it. And then it ran. So going into next week, I do anticipate that there will be, at some point in time, there will be a pullback, and I'm watching this trend line to see it hold. So we could see it come all the way back down into this $4 zone. As long as we hold above that, it's ready to move higher. That's what I'm watching. I mean, who wants to see it come down? But that's part of the chart mechanics. Nobody likes to see their favorite stock go down. Everybody wants to see it just go straight up, but it's not going to. Just look what happened the last time it broke. It needed to retest and it broke under. It's going to retest, you guys. And we're still not kind of like out of the clear yet, because it hasn't formed like a clear defined higher high. As of right now, this is just a lower high. So I'll define this for you guys. It's important. Higher high, lower low, and we talked about this last week. So and we're talking about how it was making higher highs and higher lows. It made a lower low, and people were asking me even before it made the lower low, well, what happens if it makes a lower low? How does that change things? Well, it still needs to make a lower high, which is what it did. But oftentimes what you see after it makes a lower high is it makes another higher low. And so what we're going to be seeing, and what I think is going to happen, is we're going to get that higher low that's going to come. I don't know exactly when, but this is just the chart mechanics. That's how it's going to work. Followed by, you want to break out out of this previous high, which is 443. And of course, you want to see that higher high. And when I'm looking at cycles and timing and narrative and what's happening with China and USA and what's happening all around, I feel like things are shaping up in a good way for the bulls. But this is just me trying to make sense of this entire past action. So I'm trying to actually notice I haven't really talked about the indicator yet, but this is a very simple analysis here. Now, the same is true in reverse. Now, this analysis is meant to be strictly NIO. And if you do follow me on Twitter, you would have seen my analysis on GameStop. Now, in the exact same way, how you have trend lines that go up to the downside, it's the same thing to the upside. So if we were to call that 1, and I promise I'm not going to stick here for long, so don't get too upset. I promise we're going to go jump right back to NIO, but this is actually a really perfect example to actually show you chart mechanics as to how the price action behaves. Okay? Notice how each and every single time it tried holding, it basically chopped. But in the meantime, it created a second trend line. And you want to know something? It wasn't until it finally gave you that clear break, it got its big move, which was a short. And I made the comment earlier, actually, that GameStop was too early to short. You can't really short GameStop because it was dancing between, but it was also too late to get long. And it wasn't until you got this break over here that it became a short signal. And you can see here, none of these were clear breaks. And this is chart mechanics. But again, because it's already pumped up, it was pretty obvious that like if you're chasing GameStop after it's gone up like 60, 70%, odds are against you. You're chasing out on a rally here, and it's already formed that second trend line. And I said the same thing is true in reverse for NIO. So that's all we want. This is not a GameStop analysis, but if you take even a brief second and you've got people who are saying like, oh my God, like it was shorted down, and this is naked short selling, and this is X, and this is Y, and they have wild theories, but it's and they'll look to everything but the actual chart itself. The answers are in the chart. You just have to actually understand how to do the chart mechanics and analysis, and it's as simple as drawing a trend line. You guys can all be experts overnight, actually, with a little bit of practice, and that's what I believe. Now, last week within NIO, I want to just briefly mention it had really poor delivery numbers that dropped on the very first week of the new year. And that was the narrative. Like, oh, well, yeah, no wonder it's going bankrupt. Nobody's buying NIO. And now that the price is going up, nobody's talking about those delivery numbers. Nada. Everybody's talking about Trump and Z. They're talking about the China stimulus. Now they're talking about China stimulus for EV cars. They're now talking about NIO being added to additional Chinese indexes. There's even a rumor, like buyout rumor. I'm not even going to get into that because I don't really want to talk about like this. This is stuff that changes on a whim. This is what I talked about earlier on, how your fundamental narratives and whatever the noise is, they're going to justify that price action. But you have chart mechanics that are right in front of you that's telling you what's going to happen. So I'm not trying to tell you don't follow the fundamentals. And I had some great conversations last week with people on Twitter. And I encourage it. Different opinions, different views. Please let me know. I'm all about that. Just again, PSA: stay respectful, and I've had a lot of awesome, respectful conversations, and I appreciate that. But my opinion, and you probably won't change that, and I can tell you why. But my opinion is all that matters are chart mechanics, and I believe the narrative and fundamentals will change on a whim based off what the price is saying. And I even shared a couple of different tweets about that. Everybody looks at, and this was the quote. It came from Kem Carson. He's like a very famous volatility finance guy on Wall Street, super popular guy. One of the few guys I follow on Twitter, actually. And he made a comment, and he says, everybody, and it might have not been him, but he made an answer. Everybody, what was the quote? Everybody looks at price action and then tries to figure out why. And then Kem goes on to explain, no. It's not about trying to figure out why. It's the mechanics of an actual chart. He was talking about the S&P 500, like why did it go down? And he was talking about the gap that needed to be filled, and that's just essentially kind of how it needed to get filled. And that's coming from a very credible person. That you've got so many people who respect him because the guy he's a legend. A bit complex to be honest, but if you can kind of catch what he's saying and understand what he's saying, there's a lot of gems that you can learn from following him. But that's not what this is about. This is about doing an analysis on NIO. So I hope I've kind of painted a picture as to what I'm expecting now. And I think I've had even some people come to me and said, hey, like I was wrong actually about like, always wanting a pullback. A lot of people who actually criticize my analysis, they say, you're always expecting a pullback. You're always wanting, and it's, maybe they think I'm greedy. Like, no, I'm not greedy. I'm just trying to call like the mechanics. And if you're not a believer of always waiting for a pullback, you should ingrain this entire move in your brain and never forget this for the next however many trading years, for your entire trading career, never forget this moment. Never, ever, ever forget this moment. It went from 480, 490, all the way down to 4. And had you waited for that pullback, we'll go drill down to the 15 minutes because we were talking about this all week long. Had you waited for this clean break, you would have been able to identify this right here is your first pullback, legit pullback. After breaking the second trend line. Now, the way chart mechanics works, you guys, and the way price action works is we now have another break. We have another breakout, right? It broke out. Now, what needs to happen is a retest and a pullback. And so I'm just going to do something like this. I don't know. I could do this, but it's too narrow and I don't want to. I'm just going to do something like that. But what needs to happen, and with all rallies, you'll get that pivot up. Maybe it'll give you that double top, probably something like this. We can even use Fibonacci and find that golden pocket. Okay, puts you at 438. Okay, so maybe we go earlier on into the week. We come to 438, and then it gives you that pullback. Okay, but now we're holding. Okay, this is your pullback, right? And you can see how on smaller time frames you can kind of do this, but that's essentially what's going to happen. You want to know when that's going to explode? It could do something like this. Like this is what you would probably want to see. Now, it's just an example. I mean, come next week, it could just make a new high, right? It might want to make a new high and it doesn't give you a proper pullback. Maybe it gives you another leg higher. And all that it does is it gives you another setup, another trend line to kind of draw. And this is just your chart mechanics. And you can see it. You can apply this over and over and over and over again. But I'm feeling really good about that. Now, if you want to get a bigger picture chart mechanics as to where this is going, we're going to clear all the drawings out and make this nice and clear. This is another tool. This is the second tool that you guys can practice and get used to. It's the parallel channel tool. Notice it's starred here. It's one of my favorite tools that I like to use. This is actually going to give us an idea as to where the price is wanting to go when this finally does want to run. The previous high here was 770. And if I were even being more biased to the bullish side to try and create a bigger upside targets, I could do something like that. And what do we have here? We have here resistance. And we have here support, as you guys can see. Very simple. Resistance is up here, support's down here. Right? And you got your one. You got your two. There's your two. Where do you think this thing, take a wild guess where we're going to actually test. See this, where this is going. So if we get like a 1 month rally into next earnings, you're going to come up to that $8 price mark, riding into earnings. That's the best case scenario that you're actually expecting this to go into. Okay. Now it doesn't need to stop there. Some bulls may say, well, what about the bigger price targets? I mean, like, yeah, it could absolutely go way higher. But I'm just saying that there's going to be resistance here. Can it break through resistance? Yes, it can. It can break through resistance. What happens when you get a breakout on this? You're going to get a pullback. Where is the next place it's going to go? And stack this. See where we're heading here? Boom. I mean, 12. I mean, I had it previously. I remember doing this analysis previously where it was like closer to 11. And this is more of a bullish chart. This one's less bullish. And if you wanted to stay on the conservative side, this is actually a much more longer and stronger channel. This is less biased to the bullish side, lower upside. Takes you basically to a double top. It's basically a flat like channel here. And if you get that break, notice that it's a smaller, tighter channel. You're getting maybe just below 12. And there's some confluence to that target. And we talked about this maybe in one of our 2-week-old videos. And here's the reality of this long-term chart here, guys. If I can do this right. You can see broke, retest, and it's broken now out of like, you can see it's broken out of two different. So here's another thing that I noticed. Remember the whole 1 and 2? So let's go right from the top. Let's count. Okay. Now we've got one breakout right there. That was breakout number 1. Let's just call that 1. And now we've got breakout number 2. And since making that low here, it hasn't made a new low, which is comforting. And look at that confluence. Where does that take you? Do you guys see that price target? 1190. How are we going to get to that? This is all mechanics, not fundamentals. I don't know what the delivery numbers are going to be for NIO. I'm just looking at the chart. This is just, you can see right there. Boom. How it kind of it lines up. Now, we're going to play this week by week here. I don't want to cross any bridges before we get there, but again, just because there's a line here, it doesn't mean it can't break back above. It's resistance. This was previously support. It is now resistance. So when NIO comes back up to retest resistance, which is what it's going to do here, and if it breaks out of resistance, again, the same rules apply. You got to break out on the resistance. You get a pullback. If it holds and now turns that into support, where is that next level of resistance? This is where NIO squeezes. This is when you get the squeeze. Some people are just going to wait for this, right? Now, here's also a reality and a fact. I brought this up before because all signs are pointing to this thing wanting to come up and retest resistance. If it rejects resistance, and I suspect it will take a couple of attempts, but if it's unable to reclaim, now I wouldn't say it would be completely all over, but it would be very, very, very stark. You wouldn't want it to kind of come down. You wouldn't want it to reject that. So again, it's a very careful area. And I'll use an example here. I'm going to use Bitcoin. I have the arrow here. I think I shared this in one of my other videos here. You can see how it broke under. And it took time from when it broke out. You can even see you got the 1. This is chart mechanics. You can say 2. I don't know, you'd have to zoom in to actually get that trend line, but there's your 2, right? Your 1 and 2. You're at 16K, and where does it go? It runs up, rides, retests. Of course, what does it do? It gives you a massive pullback, opening the gates to like some people had $8,000. For NIO, it's not pretty because if I were to stack this channel, and there's different ways around it, but it doesn't go to zero. Like, I mean, like if anything, you wouldn't get a zero, but you would get pretty ugly price action. It would just be like, it would just like stagnate like this all the way down into like the penny land. And then maybe one day you would get that squeeze and then it would retest again. I mean, this is a reality. Okay. No investment is guaranteed. And I wanted to share that with you guys. Like, you know, when you are investing in a high risk stock, it is, you know, it's not fully proven yet. This is a potential, but I've got a good feeling things are actually going to work out in favor of NIO. A lot of nice things and a lot of good things that I'm seeing. And this is one of those things where we'll cross that bridge when we get there, and it'll be a good bridge to cross. Because if you're having to make a decision on what you need to do with your NIO when it's trading at $12, that's a good thing. Because right now we're at $4. So one of those things that will cross that bridge when we get there. As for now, we play things we play it by ear. We play it week by week. I know some people now are starting to get very, very bullish because that narrative has shifted, but chart mechanics still say we can get a pullback. Because there's your 1, there's your 2, and I'm going to highlight this again. I did this in the beginning, but I feel like it's a nice reminder for you guys. There's your breakout, and then it pulled back and it broke under. So that's a failed, basically, retest. We got another breakout, and it's going to try again. It's going to come back down, and we're talking like how high? 7 and 8. Like that's 7, like basically double top. You can kind of expect it to kind of rise into that actually. So that's kind of what I'm hoping to kind of see. And we're gonna play this by ear and see how this all plays out. You can see it's just holding right above that. That is beautiful. I don't know if I drew that perfectly. That is so beautiful. Beautiful bounce. Now, if you go back to some of my older videos, like I'm talking like a month, like back when we were like trading, like around up here, and I'm not saying do that, but I've always said like that was a possibility. I always said like, look, like the stock traded forever in this range, and what did it do? It came right back into that range actually. Now, let's see how next week goes. I think it's important to taper your expectations. A lot of people are getting excited. I'm getting excited, but I also know chart mechanics are everything here. And just like we got very, very excited right over here, let's hope we don't actually get like another situation where it comes right back down and does that. I'm leaning towards no, it's not going to. Now, we haven't even looked at the velocity. Let's wrap up and talk about the velocity indicator. Notice how like the entire analysis, there's no velocity indicator. This is just kind of giving you extra confluence. And there's some really good things that I've noticed on the velocity, which is how we're going to wrap up this analysis. Now, there are a couple concerns here. Well, I mean, good thing is it hasn't broken here. It did make a lower low here. And when you see lower lows get made, you do need to see it make a higher low still. So there's going to be like another pullback. Unfortunately, that's just the way it is. I don't think it'll be as smooth sailing as people think it will be. And if I see it come back down into that $4 zone, I will not be surprised. Just because the velocity, it's not the most bullish trend. It is a bullish divergence, but it's relative to its previous low. That velocity was supported, meaning it needs to make that higher low for us to kind of really get going. On the 12 hours, I'm loving it. I'm loving it. And this ain't no McDonald's commercial. The 200-day moving average, notice how it made a lower low here? And this was always kind of like at the back of my mind, like 24 hours is still bullish, but now that it actually formed a lower low, it's technically, as you can see, forming a higher low on that 12 hours, which is fantastic. And not only that, it broke back above. So beautiful. So freaking beautiful. I love that it broke back above. And the 4-hour chart's kind of like the same thing. The 200-day moving average, which is this yellow line, it made a lower low. And it broke back under. Now here's the stark reality. I'm going to try and draw out that 200-day moving average, and then I'll try and draw the velocity here. The velocity could do this, like, now we have that higher low, which is always a good sign. The last time you had a lower low followed by the higher low was right here. And so you could argue that maybe we're around here. We're not quite, guys, but we're getting there. We're getting there. So I love that. And then you go, of course, into the 2 hours. Like, it's gone ballistic, the velocity. It's just nothing. Like, it has so much momentum. So much so that it's telling us that it's already, the velocity supports above 460, 470. Like, there's definitely some real big oomph behind that. Now, not only that, remember, some of you guys might remember when I did this analysis on the velocity where it broke and gave you a pullback on the chart. Or sorry, it broke and gave you a pullback on the velocity, but it didn't do it on the chart. That pullback actually came under. And I was saying, like, we need to get the pullback above the chart. And what happened? We did get a pullback, but it failed. It failed the pullback. And now we're basically back in that same boat. Now the price is above, the velocity is well above. And what we want to see is that pullback, and we want to see it just kind of run. And we even have another trend line here. We've got this. We could see something. I want to tell you guys and kill the buzz and be wrong, because I could be wrong. Maybe it does just keep going and the hype keeps going, and we get something like that, right? And we're talking, it keeps going, but this looks good. This looks really good. Now, but on the 2 hour time frame, just like on the 4 hour time frame and the 12 hour time frame, it did make a lower low here. And so what does that mean? It means this, usually, when you get a lower low, is it needs to make a higher low. And what that often is suggesting is when you do get that pullback, it'll be sizable pullback. It'll pull back up. And now we have a higher low on that. And this is just chart mechanics. This is how it's going to work from a velocity perspective. And it's the same thing on the hourly. Okay. And there you have it. So I'm feeling really good about NIO, but we'll have to play it by ear. I was feeling good, like, honestly, on this week as well, because it broke out of our second trend line. And I was feeling good, but this is actually a stark reminder. Always wait for the pullbacks. Otherwise, you'll get a shit entry. And it might be a fake out, and you won't know until you get it. But I'm loving it. I'm loving it. I'm loving what I'm seeing. A lot of it is reminding me of what I saw here. And what we kind of want to see is we want to see it kind of give a successful pullback. But that's it. That's my analysis. A lot of it might have come across as redundant or repetitive. Maybe this analysis might have been long for you, but my goal here is to try and educate and share where I kind of see things going with NIO. And going into next week, I do see there being the chance for us seeing kind of a bit of a pullback to retest this second trend line before this thing is go time, baby. And of course, go time as in let's reach the top of this trend line. Let's retest the resistance. The resistance of NIO is right here. This is where resistance is. Let's go back up there and let's give it a test. Okay, that's where we want to get to. $8. That's it. That's all, guys. It's geez, it's 8:20. I don't even know how long this video is. It might have been too long. So if you've watched this entire time, Thank you so much. And again, just as a friendly reminder, don't forget to smash the like button, hit the subscribe button if you like what you see. And in the comment section below, feel free to share me your thoughts. Let me know if you don't know what to say hi to me. Let me know where you guys are from. And yeah, I'd love seeing your guys' comments. And if I can, I will try and reply back to you guys. Thanks for watching, guys. Cheers and have a great weekend.